Hi, this is Tom Koviak, licensed loan officer. Welcome to the channel. So in this video, what we're going to do is a market update, rate update, whatever you want to call it. Just kind of let you know where you stand and give you that information. So I haven't did one of these videos in a while. It feels good to be back. I also will put some of these links down below. That way you can find these links and I'll show you some cool stuff. Really quick, this channel is all about first-time home buyers. It's all about buying a home, investment, all kinds of stuff, budgeting. Please check out my channel. Hope you like it. So without further ado, let's get into the video. Like I said, we're going to talk about rates, and I'll tell you a little bit how to predict rates and check rates. Then I'll give you kind of a market update of what's going on in the market. This will help you become better consumers, kind of give you an idea what's going on, give you some more confidence. And if you have questions, always comment below. I'll try to get to those comments, and then you can always give me a thumb up and things like that. So let's get into it here. So what this is called is mortgage daily rates. What this does, it takes the average of all the rates that lenders are giving you, and it just kind of compiles it. So on this one, what you need to pay attention to is this one here. This is like a 30-year conventional fix. As you see, there's no changes because right now around recording this, the market's not open. But normally you see like a green or a red. And to give you an idea, a red is good. Red means kind of negative. That means the market's kind of going down for you. And then positive means that the markets are kind of going up a little bit for you. So right now, if you're getting a 30-year fix, it wouldn't be a 6.22. It would be like a 6.375, 6.125. Rates kind of move in like a 1/8, but this kind of gives you a ballpark. So right now, 30-year fixed conventional, you're looking at around 6.125, 6.375, and then a 15-year will be like a 5.75, somewhere around there. And the very popular one will be like a FHA mortgage, a government back loan. A lot of people do FHA mortgages. I love FHA mortgages. So the average rate right now would be like a 5.75. We wouldn't give you a 5.876, but like I said, it averaged it out. Now, what's cool about this is that you could put in different loan amounts. Let's say you're looking for a home for, let's just say 150. You could change this to 150 here. 1, 2, 3. Now, this is just your principal and interest. It does not include your taxes, insurance, maybe mortgage insurance, but it gives you kind of a ballpark. So if you're doing an FHA $150,000 loan amount, then you can barely see this. Let me zoom in a little bit. So is that better? Yeah, I think that's better. So yeah, so if you do like a $150,000 loan amount, if you had 30-year fixed FHA, let's just say 5.75, you're going to have $886 a month plus your taxes and insurance, conventional 9.1. And you can change it to, let's say you're doing a $300,000 loan amount. 1, 2, 3. About 1772, conventional 1841. So that's kind of how that works there. And yeah, I'll put this down below. It's good to check just to make sure you're getting a good deal. Now, sometimes if your credit's a little bit lower, these numbers will be a little higher. If your credit's a little bit better, these numbers can be a little bit lower. But it gives you a good ballpark, just kind of see. And as you can see here, this is kind of how rates were. And you see during COVID, they hit rock bottom, and then they kind of went up, 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 and they're kind of heading down. Now, if you ever want an idea of like, should I lock a rate? Should I not lock a rate? Just kind of, idea. You could always come to the 10-year Treasury. And let's just do the last 6 months here. And I'm going to zoom in here. Let me get myself out the way here. So remember when I told you green means up? So green means kind of bad for you. Green would mean like, hey, you're going to get a little bit higher rate or not a good day. Red is good. Okay, it's kind of reverse. Now in business, green means you're profitable. Red means you're losing money, but mortgage is a little bit different. So this is just the last 6 months. As you see, when we started the year, rates were a little bit higher. And as you see, they kind of go up and down. And now they're kind of here. They're here. They were here in June. And then let's just see year to date here. Same thing, year to date, they were up here. And then now they're down here. And that just gives you an idea. So if you ever see this red, then that's good news. And you might want to lock in that rate if you like the rate and cost and things like that. If this is red, but right now we're at 4.375. Let's see what it was. Let's see what it is. So here it was 4.675, somewhere around February, and now it's at like 4.0. So this is kind of where it is. They're just kind of going down. Don't pay too much attention to interest rates. Yes, they save you money, but hey, how does that payment look? Okay. At the end of the day, we make payments in dollars, not on interest rates. And also, you could always buy the home and remortgage the rate. I've done that, once. So let's talk a little bit about the market update. This won't be a long video, just so you know. So let's talk about home value decline, but losses since last year. So over the past year, can you see this okay? Let me zoom in a little bit more for you here. Is that a little bit better? I'll read it to you, but hopefully you can see it. So over the past year, more than half, which is like 53% of homes have lost value, the highest since 2012. So for buyers, this would be good news. For buyers, it means homes are a little over-evaluated. We've seen rates and homes go up really high during COVID. So now they're, half of them are coming down a little bit. And that's actually good news if you're a buyer. That means the market is cooling off. You're going to see that also on Zillow or Redfin or Realtor.com. You see like a high price, and then you see, hey, the home came down 10,000, it came down 15,000. You're gonna see that now. So the market's cooling off. For sellers, it's still a good market to sell because your homes have been going up and up, but now it's cooling off a little bit. So it's good news for buyers. And then for rates too, as rates come down, you can afford a little bit more home. Okay, and also you have a little bit more buying power. So when rates come down, rates are good for actually sellers because the lower the rate, the more of a home price the buyer can afford. And it's kind of good for both. Okay, I don't want to get confusing, but it's good for both. It's good for the buyer because they can afford a little bit more home at the same payment. It's good for the seller because they can actually afford that home. Also, let's see, 4.1% of homes are down since last sale price, 2.4 a year ago, and 1.6 down substantially since the last sale price. So again, homes are just cooling off, 4% down from last sell point, 2.4% a year ago. So really good news for buyers. If you're on the sideline, not sure to buy, things are cooling off a little bit. You kind of want to get into the market if you qualify, if you have the credit, income, and assets. Income, you might want to do it better than later because as homes keep getting more and more affordable, there'll be more buyers, okay? And then now you're competing with those buyers and it can go up a little bit. Only 3.4% of new listings are priced below the previous sales point, with 2% substantially. I'm sorry, I can't even pronounce that. So only 3.4% of new listings are priced below the previous sales point. So most homes are priced a little bit below the previous sales price, okay? And then it just talks about a little bit of hidden costs. Now, this is not good news, but let's talk a little bit about this. On average, homeowners face about $15,000 a year in hidden costs. I kind of disagree with that. And it's saying about $1,325 extra per month on top of their mortgage. They said a large chunk of that are maintenance, about $10,000, $900 in maintenance. I don't know if it depends on the home. I know I don't spend $10,000 a month or $10,000 a year for maintenance. And then it's saying 2003 for insurance, 3030 for property taxes. So property taxes and insurance taxes go to the city, for the school, the police, the things like that. The parks, and then insurance covers your home if anything happens. Maintenance really depends. It really depends on maintenance. You want to maintain your home, keep it in good condition, but I don't know if you're spending $1,300 a month on maintenance. If you don't believe me, ask someone who owns a home. And it says higher costs in metro areas like New York, of course, San Francisco, of course. And then let's see what else it says here. Mortgage rates bounce sideways after Fed's reset. Mortgage rates nug up after the Federal Reserve October meeting, where a rate cut was made, but December cuts were made uncertain. So they did make some cuts in the Federal Reserve in October when they met. They might make cuts in December, but it's saying they're uncertain. We're in December right now. I'll keep you posted on that. And since mostly traded sideways, I'm not sure what sideways mean. What's sideways? I think that's maybe like steady. Despite a boost in fall buyers and seller engagement due to lower rates, affordability remains a major hurdle. Home prices are down in many metro areas, but still above pre-pandemic levels. Yeah, so affordability is a big issue, especially in some areas. It's very hard. And then what's more difficult with affordability is that if you're paying a higher rent, it's hard to save for your down payment and things like that. But stay positive. I always tell clients, control what you can control. What you can control is your savings, keeping your good credit, maintaining your income, things like that. With the potential end of the government shutdown in sight, key economic data, jobs, inflation may return soon, making further rates market volatile key. So there's a lot of different things that affect rates. It's saying that the government shutdown is in sight. And as you know, today the government is open. And then these actually do affect rates, jobs, inflation. The way jobs affect rates is everybody is working and the economy is strong. The Federal Reserve probably will not lower rates further. Now, if inflation is kind of high, the same thing will happen. They won't lower rates if inflation is kind of high. But if we need more jobs, they probably, like a bad job report, they will probably lower rates. The way it works with interest rates in America is that a lot of times companies borrow money so they can hire people, borrow money to expand, borrow money to make products. People borrow money for cars, houses. Money somewhat stimulates the economy. Also, with lower rates, sometimes people have less interest on their credit cards, which gives them more money to spend on other things. So they kind of use interest rates to kind of fuel the economy. Think of it that way. It kind of fuels the economy. So bad economy news will lower rates. Good economy news will keep rates high. Also, the rates can kind of cool off the market. So if the market is really hot, they can higher rates a little bit, make money and borrowing a little bit more expensive to cool off the market. But right now, it seems like things are kind of cooling off a little bit, especially with home prices. So I always think it's a good time to buy. I always think that it's a good time to invest in your family and get homes. So this is kind of a market update. These are good rates. You may not think these rates are good compared to COVID, but that was market low rates. And remember, that was a worldwide pandemic. Remember, bad news. So bad news, what do? Lower rates to help the economy, help stabilize things. So let me know if you have any questions. Just so you know, I am a licensed loan officer. I can help you get pre-approved. I can answer questions for you. Feel free to reach out to me. Thanks so much. I'll see you again on the next video.